It's not just about last year's balance sheet or last year's profit and loss account. It's not just about providing hindsight or oversight. As a CMA in business, you're expected to be on the driver's seat of the organization. You're expected to leverage AI and analytics to predict the future, provide insight and foresight, and drive the organization forward. The accountant of the future isn't a number cruncher. He or she is a strategic business partner, and CMAs are leading this transformation. Accounting and finance teams are moving beyond static reports into intelligent decision-making using data analytics and AI. This evolution follows 4 broad stages. The first one is descriptive analytics, which is basically what happened in the past. For example, a company is losing money. The immediate next question would be why? That's what we call diagnosis or diagnostics analytics. Now, accountants traditionally have used pivot tables in Excel to do this analysis, and this is all analyzing the past. But accountants of tomorrow are also expected to perform predictive analytics, talking about what will happen next. Let's say you're talking about turning around the company, the loss-making company, to profitability. And finally, you've got prescriptive analytics, which is where the CEO will ask you, how can we make this happen? For example, Pepsi doesn't just track past sales.
Enter intelligent sales. So this is a long-term journey. One could say it'll be part of PepsiCo's core DNA forever. In fact, we're excited that this capability might actually be what we call lifted and shifted to other markets in Europe, in Latin America, in APAC, in EMESA. We do sales around the world, and so we're looking for opportunities to grow there. And we're just getting started.
It predicts future demand with AI-driven analytics. Every day, millions of people buy PepsiCo products. But what flavors will trend next month? How will inflation impact raw material costs? Which stores will need restocking before they run out? These are not guesses, they are calculated predictions. AI models analyze real-time data from supermarkets, vending machines, and online sales to predict demand for different beverages and snacks. Seasonal trends, social media insights, and weather forecasts help Pepsi adjust inventory and production before demand spikes. Raw material costs like sugar, aluminum for cans, packaging materials are forecasted using AI, allowing Pepsi's finance teams to hedge risks and optimize pricing. With AI-driven forecasting, Pepsi doesn't react to market changes, it stays ahead of them. And CMAs, they play a crucial role in translating these insights into cost-efficient, high-margin business strategies. For years, Excel was the backbone of financial analysis. But today, you've got Power BI, Tableau, and AI-powered analytics, which are revolutionizing the field. CMAs who solely rely on spreadsheets are already behind. Those who embrace AI-driven dashboards are shaping billion-dollar decisions. Let's take the case study of Walmart, which processes millions of transactions daily. If they waited for month-end reports, they'd miss billion-dollar shifts in consumer behavior. Instead, Walmart's finance teams use real-time analytics dashboards tracking pricing trends, demand surges, and supply chain risks, adjusting strategies instantly.
I think supply chain is one area where we are really using AI and data in the best way possible to for a couple of use cases. To give an example, like of course, inventory planning and management is an important one, and demand forecasting is a very important component.
This is what the future CMA must master: real-time AI-driven decision-making. The CFO's crystal ball is predictive accounting. Forecasting used to be a guessing game, but today, AI can predict cash flow trends, revenue fluctuations, and even economic downturns with stunning accuracy. Let's take the example of Amazon, which doesn't just react to demand, it predicts it. Its AI models analyze market trends, weather patterns, and buying behavior, adjusting inventory and pricing in real time. The finance teams behind this don't just record transactions, they are shaping billion-dollar business strategies for Amazon. How about the most routine accounting jobs, data entry or transaction processing? These are vanishing. AI-powered robotic process automation or RPA is already handling invoice processing. So AI scans and matches documents in seconds. Reconciliation, thousands of transactions verified instantly. As well as regulatory compliance, where AI flags suspicious financial activity before humans even review it. The CMA of the future isn't stuck on manual tasks. They're focusing on strategy, risk management, and business transformation. For example, Tesla automates payroll, invoice processing, and financial reporting with AI-driven ERP systems, allowing the finance team to focus on growth, not data entry. The accountant of yesterday was a historian. The accountant of tomorrow, a data-driven business strategist. CMAs who embrace AI, automation, and analytics will be at the forefront of corporate decision making. Those who resist, of course, will be replaced by AI. The future of finance isn't about recording transactions. It's about predicting the future, advising CEOs, and driving business success. The real question is, are you ready for the transformation?